please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, just want to point out one particular stock, Indoco Remedies, should come up for you. We already knew that the UK MHRA had inspected their Goa Unit 1, and at that point in time, the company had said that they had received around 7 observations totally, which included 3 critical observations. So the news today is that the UK MHRA has now converted their inspection, which they had conducted of the plant, into a non-compliance certificate. So according to the UK MHRA, there are 3 critical observations which have come out. So that includes evidence of falsification of data in their GMP records. The pharma quality system was ineffective, plus there were false and misleading statements which were provided to the inspectors. So that's the reason why you're seeing that downtick come in on the stock, because now the company will not be able to supply to the UK as well as the European Union markets unless there is some amount of a re-inspection or remediation effectively which is undertaken by the company. So obviously negative news. As you can see, the stock is now reacting to this particular non-compliance certificate which has been given by the UK MHRA to the company, to the company's Unit 1. Just to put it into perspective, UK is around 10 to 15% of their total sales. But that's on Indoco Remedies. We have Ashwani Gujral joining in to discuss the markets now. Ashwani, hi, over to you. What is your Nifty call, as well as what would your stocks be?
See, it's clear that at higher levels the market is losing a bit of momentum, and today we hardly spent any time above 10,600. So it's clear that the market is rejecting those levels, and while IT off and on participates, but just IT cannot take the market higher. So good time to get short on Bank Nifty as well as Nifty. The stops are very close by. It's extremely clear there's a struggle at those levels. So you have a 30-point stop on the Nifty, maybe 100, 150 on the downside. Similarly, on the Bank Nifty, 25, 200 is a decent stop, and if it starts working, you could easily get 600 to 800 points. So this sort of making no progress is not bullish. Having said that, today a lot of these NBFCs are moving the other way from banks. So DHFL is a buy with a stop of 607, target of 625. L&T Finance is a buy with a stop of 164, target of 176. And Vedanta is a sell with a stop of 297, target of 282.
Okay, we will sort of put some questions from viewers to you. The first one is essentially a question from Ajay, who's got 6,000 shares of Motherson Sumi. He's paid 347 rupees a share for, each for them. Wants to know the view on the stock. You've had a favorable view on Motherson, Ashwani, for a long time. What would you tell Ajay?
Well, the stock is favorable, just that this year markets may not be as favorable. So just keep on holding, adding to your positions. Short-term target could be, which is 6 to 8 months, is about 420, and long-term 5-year type of target could be even 950, 1,000. So just stay in it, because gains will happen in spurts. So it's not like every month there'll be gains, etc. But I think you're in a good stock.
Okay, Ashwani, thanks very much. Appreciate you joining in with those with those trades, etc. There's news at the bottom of the screen. This is Monnet Ispat. Now, I think there was a flash yesterday. There was news yesterday that Kotak had agreed to come on board the proposed proposed agreement to resolve the Monnet Ispat asset. So JSW Aeon Capital had come up with a resolution plan. I think the committee of creditors was sort of behind it, and I think Kotak Mahindra Bank was holding out. And I think it was only yesterday that Kotak had said that, okay, yes, we are on board as well. We agree, and now they have withdrawn their approval to this resolution plan. I think Ritu, my colleague who's tracking this closely, is standing by with what exactly would this mean, and also the sequence of events. Ritu, over to you.
Well, interestingly, Prashant, the NCLT clearance is the final word, and that is something we're still awaiting. But yes, as you said, Kotak Mahindra Bank, as an unsecured lender, had yesterday, moved the NCLT and said they wanted to be part of the resolution plan, because if they were not part of the resolution plan, they would not get the dues that the other lenders would get because of this Aon JSW proposal. Now, today in court, there's an interesting turn of events where they've withdrawn their support from the the proposal that was submitted by Aon and JSW, but that in no way impacts the case itself, because remember, they already have more than 75% vote. In fact, they have about 98% approval from the lenders. Only the NCLT clearance is pending for Aon and JSW's offer to really go through. So that is something that we're waiting to see. But Kotak Mahindra Bank pulling out should not make any material difference whatsoever to the resolution plan.
Okay. All right, Ritu, thanks very much for putting that into perspective. But you're also following some news on Essar Steel?
राज करते हैं.
Okay. All right, I think there was a little bit of a technical mishap on Ritu's link. I think we can get back to her. Ritu, are you still with us?
Yes, okay. Very much. It was a marathon lenders meeting for Essar Steel yesterday, and this was the first meeting that was held after the NCLT order, which directed the COC and the RP to revisit their decision to disqualify bids in the first round. So both the New Metal and ArcelorMittal bids were opened by the lenders yesterday. Now, importantly, we understand that ArcelorMittal's bid is far higher than what New Metal had offered. In fact, ArcelorMittal, we understand, is offering to pay about 60% of the financial creditors' claims, and New Metal is offering to pay about 30 to 40%. But of course, the final offer is yet to be decided. The eligibility will be key. Now, both of the players have been asked to submit documentation proof as to how they comply with Section 29A, where they were disqualified by the resolution professional earlier. They'll also be given a 30-day window to cure their ineligibility, so to say, as per the court's directions. But the other route that the lenders are talking about is moving the NCLAT, which is the higher authority on NCLT, to see if the earlier decision can be challenged, because some lenders feel it is constraining on the lenders, given that they'll only now be allowed to consider Arcelor and New Metal's bids, because there's not enough time to invite fresh bids, and players like JSW and Vedanta could also drag the lenders into litigation over their decision to only stick with Liberty and New Metal, Arcelor and New Metal.
Okay. I think we can get talking about Raymond, which in fact reported what was a strong set of numbers. We have with us Sanjay Bal, the Group CFO of the company, who joins in to discuss the Q4 performance. Hi, Mr. Bal. Thank you very much for joining in. Well, overall, it was a good set of numbers, but tell us a little bit more about your margins, which have improved around 160 basis points. Are they sustainable, as well as for your verticals, such as your textile and branded business?
Businesses have made a strong recovery from really the impact of the two structural reforms which impacted the entire economy last year, which was demonetization and GST implementation. So we've seen significant growth in revenues and in margins and profitability across all our segments. Our branded textiles has grown by 10%. Our branded apparel has grown by 19%. Our garmenting business has grown by 7%. So all in all, it's been a year of consolidating the revenue growth, of business profitability, of working capital efficient management, where we've shaved off 14% of our working capital efficiencies. Our capex cycle has also come to an end with this year. So the heavy capex that we saw in 17-18 of 400 crores will now see lower capex as in the years ahead. Our ROCs have improved significantly.
Okay. The board has approved, to develop 20 acres of land. Can you provide us more details of it?
Yes, this is really a long-awaited, decision which we have been working on. Each of the quarters, I have been asked this, and I've said that there is a team which has been working on in terms of evaluating various options and, options to monetize the land. So happy to report that the board has approved plans to monetize 20 acres of land for development for residential purposes. This is a development which will be done by the company, and we are in the final stages of preparing the project plan.
Mr. Bell, you said the cost is going to be about 300 crores. Could you tell us where this is exactly going to be used? This is essentially 300 crores for construction, purely construction?
Yeah, this is going to be done, phase one is going to be done by the company. So we have secured major approvals already, as we have mentioned in the press release. We are in the process of really fine-tuning the plans and implementing the suggestions which the board has made. So in a couple of weeks' time, we'll be ready with the project details, which we will then inform everybody, the investors and the press, on the specific plans. As of now, what we have is approval from the board to work on development of 20 acres, which is around 3 million really square feet of saleable space. The project will be executed over 5 to 6 years. In the first year, we have earmarked about 300 crores.
Mr. Bell, how are you planning to fund this?
See, there is no cost that we have to incur towards the land acquisition, except for the approvals that we have to secure. There is a cost towards that, and we've spent already 100 crores in the fiscal year 17-18. We have earmarked another 300 crores for next year, and this is largely going to be towards construction finance. For land, for approvals and construction finance. And as the project, since the project execution is over 5 years, we do not see any major need for funding beyond what is the construction-linked financing. But we will be working more details of this, and the communication on this will come out very shortly.
Okay. Can you give us a sense in terms of what the investment strategy would be for your retail vertical?
If you look at 17-18, we added about 190 stores, and our net addition was 139 with closures of 51 stores. We have developed a very unique model of a mini PRS asset-light and efficient model of a small store, which really is targeted at the tier 4 to tier 6 towns. In the year 17-18, we opened 91 stores, and all of them were franchise stores. Our strategy is that all the stores, retail stores that we open, at least 75% of them would be franchise-owned and 25% would be company-owned. And we will continue with this strategy in the year 18-19. The ambition is to open another 250 stores. We seek to rapidly scale up the retail footprint. We are already at 1,219 stores end of 17-18.
Right. So since only 25% is company owned, the requirement for capex is minimal, right, Mr. Bell?
No, there is capex for these balanced 25% stores which will be company owned, but that has been provided for. So for the next year's, which is 18-19, we are looking at really a capex of 250 crores across all our group companies at a Raymond consolidated level, and which will include about 40 crores of capex for our apparel division.
Look at the stock, Mr. Bell. As we were speaking, the stock is spiked up. It's up at the day high, 5.5% higher. Thank you very much for your time, Mr. Bell, and good luck. We speak with you soon again. So 60 rupees on Raymond, 1123, 1124. I mean, I guess the market likes the commentary because you know, it's not as if it started reacting early
rank
on.
Outperformer. I mean, in the past 12 months, it's gained around what, 45%?
Absolutely.
It's a huge outperformer.
Absolutely. You know, I think let's invite another guest now into onto the discussion, and this is markets now. Mehra Birani is with Tata Investment Corporation, manages a large corpus of funds. Mehra, thanks very much. Good to have you with us here. Thanks for your time. Are we entering a bit of a sort of confusing kind of area for the market? Because you know, the market was moved up substantially even as oil was moving up, yields were moving up. you know, traditionally the relationship between some of these variables and stock markets is inverse. But when we moved up, along with everything else also moving up, oil, of course, being the most important variable for India. Now, as those things start to, maybe those things start to reverse, what is the reaction here going to be?
Yeah, good morning, Prashant. Thanks for calling me. If you see, a few weeks back, I was on your channel, and at that time I had said that, you know, the valuations currently are at least 10 to 15% premium to long-term averages. And the delta which the earnings expectation, which analysts were having almost 18-20% growth, was mainly coming from certain PSU and corporate banks, and also from global cyclicals like oil, metals, etc. If you see the events which have happened over the last few weeks, I think clearly the growth in the PSU and corporate banks will still be a little bit eluded. I think the NPA cycle is not behind us, and I think still we have to watch at least for next 1 or 2 quarters how this pans out. Also, the global cyclicals have been very volatile, as you said. Oil prices have also gone up. The US has announced some trade barriers, etc., which is not helping. So I think now the earnings expectation is around 14 to 15% going forward, on which basis I think we are valued at close to 18 times forward earnings, which is again at a 10% or 12% premium to long-term cyclical average. Even on a price to book value 2.6 times with ROE at 14%, which is 100% discount to the long-term average, is slightly costly. If you see interest rates, as you said, have also gone up. Today, if you see bond yield minus the earnings yield of the Sensex, it's almost 175 basis point, which is also quite high. Market cap to GDP at 90% is also higher than cyclical valuations. So, yes, clearly those headwinds are there. Also, inflation has been recently rising, and RBI has clearly said that they will target inflation. So that is another factor. Yes, certain positives are there, that the GDP expectation has improved, the monsoon is expected to be good, etc. That positives are there, but yes, there are a lot of headwinds which we have to tackle. Also, one more thing, the global, if you see the US 10-year treasury yesterday touched 3%, which is after many years it has touched 3%. The fiscal deficit over there is almost $700 billion, and economists over there are predicting that it will touch $1 trillion over the next 1.5–2 years. So if US treasuries were to rise, that will be a big negative for flows into emerging markets over the medium to long term.
Mehrab Irani of Tata Investment Corp is still with us. Mehrab, you know, we were just discussing earnings in the break. So I wanted your thoughts in terms of how earnings have fared according to you, and what has stood out according to you, and what would make you a little more overweight from incremental levels just based on what they've reported.
Yeah, if you see, private bank earnings have still been good. Private bank, NBFCs, that space is still good. No doubt there is some little slight increase in NPA in certain banks, but otherwise the earnings continue to be very good in that sector. The margins are good. Though the valuations are very costly, but I think I will still remain positive in that. A lot of the IT sector which reported numbers, I think some large cap numbers were really very good, and the commentary which the management is giving is also very positive. And in the mid cap IT space also, particularly in the product companies, etc., I think there is a lot of scope, and we have to watch that space also. Another sector which we have to watch, I think, is the consumer sector. The FMCG sector, that has been doing good. If you see few quarters back, the story was that the gross margins were expanding because the input prices are coming down. But now over the past 1 or 2 quarters, volume growth has started coming back in that sector. And with volume growth and the margins remaining stable, I think that is still positive. Although they are most of the companies in the consumer space are trading at 20 to 30% premium to long-term averages. But still, I think they remain good. Another sector I would be positive would be the auto sector. I think the auto numbers continue to be very good, whether it's two-wheelers, scooters, whether it is passenger vehicles, etc. are very good. Again, valuations over there are certainly not cheap. Most of them are trading at 20% plus premium to their own cyclical valuations, but still the growth and the numbers are coming, margins are stable. I think will continue to remain positive in that sector as well.
One sector which is talked about over the last month or so, month and a half or so, is media. Do you own stocks there? I mean, could be radio companies, television companies.
We do own some in the media and entertainment space, and yes, it is a very small segment. But
it's small, yes.
Yeah, but the opportunity, I think, is quite there in certain pockets of that segment. I think the consumerism is still going on, and that will, I think, help even certain entertainment, media, and those kind of businesses. And I think I would certainly be positive, though it's a small space, but we are positive on that space, and we do own
political elections.
Yeah, that is another reason. But I am not very sure about the print media, though this year, because they have been facing their own problems. But as you mentioned, certain other businesses like radio, I think it's still an emerging business. And if you see the radio growth in India, it is second. Internet is highest at around 30%, and the radio volume growth is almost 17% plus. So that business still looks good, and the phase 3 auctions, etc. over there are are already over, the capex is over, the margins, EBITDA margin in that business around 35%. So that business still looks good and over the medium term should have potential.
Okay, Mehrab, we don't have much time left, so a quick answer from you about the rupee, which is at a 14-month low. Are you worried that that could impact sentiment?
Yeah, rupee at a 14-month low is obviously a worrying factor, but that has actually, in the other way, it has helped the IT sector. And today, if you see, the IT stocks are doing very well on that basis. But yes, we have to see what happens on the manufacturing exit.
Okay. All right, Mehrab, we're going to wrap up the conversation now. Thank you very much for joining in and speaking with us. So that is Mehrab Irani talking to us on the fundamentals of the market. Well, for the Nifty, we're a bit sluggish right now, down around 0.25%, and